Why credit cards are designed to trap you. Credit cards are often marketed as tools of convenience and financial flexibility. They promise rewards, cashback, travel points, and the ability to buy now and pay later. At first glance, they seem like a smart financial tool. But beneath the surface, credit cards are carefully designed systems that encourage spending, increase debt, and generate profit for the companies that issue them. So, are credit cards really helping you or trapping you? To understand this, we need to look at how they actually work. When you use a credit card, you're not spending your own money. You're borrowing money from a bank with the promise that you'll pay it back later. If you pay the full balance on time, you usually avoid interest. But if you don't, that's where the system begins to work against you. Interest rates on credit cards are often extremely high. In many cases, they can range from 20% to 30% annually. This means that any unpaid balance quickly becomes more expensive over time. Even a small amount of debt can grow into a much larger problem. But interest is only one part of the system. Credit cards are designed to encourage you to spend more than you normally would. Think about it. When you pay with cash, you physically see your money leaving your hands. This creates a psychological barrier that makes you more cautious. But with a credit card, that barrier disappears. You simply tap or swipe, and the transaction feels almost invisible. This is not an accident. Studies have shown that people tend to spend more when using cards compared to cash. The process is smoother, faster, and less emotionally impactful. And that's exactly what the system wants. The more you spend, the more profit is generated. Credit card companies also use rewards to influence your behavior. Cashback, points, and travel miles are designed to make spending feel beneficial. It gives the illusion that you are gaining something every time you use your card. But in reality, these rewards are small compared to the interest you might pay if you carry a balance. The system encourages spending first, while the real cost comes later. Minimum payments are another key part of the trap. Each month, you are given the option to pay only a small percentage of your total balance. This makes the debt feel manageable, but paying the minimum keeps you in debt for much longer. Most of your payment goes toward interest, not the actual amount you owe. This means your debt decreases very slowly, even if you keep making payments. Over time, this creates a cycle. You continue to spend, you make small payments, and your balance remains. The system keeps you locked in. Late fees and penalties add another layer. If you miss a payment, you may face additional charges and even higher interest rates. This makes it even harder to recover financially. One mistake can quickly snowball into a larger problem. Credit limits also play a psychological role. As your limit increases, it creates the feeling that you have more money available. But in reality, it simply increases how much you can borrow. This can lead to overspending without immediate consequences. The real impact is delayed, which makes it harder to recognize the risk. Another important factor is how credit cards are integrated into everyday life. Online shopping, subscriptions, and automatic payments all make it easy to continuously spend without thinking. Small purchases add up over time. And because they are spread out, they don't feel significant in the moment. But at the end of the month, the total can be surprisingly high. Credit cards also benefit from human behavior. People tend to underestimate future costs and overestimate their ability to pay later. This creates a gap between intention and reality. You might think, I'll pay it off next month. But unexpected expenses happen, and the balance remains. Over time, this turns short-term borrowing into long-term debt. The system doesn't need you to fail completely. It only needs you to carry a balance. As long as you don't pay everything off, interest continues to generate profit. And that profit can be significant. Millions of people paying small amounts of interest create a massive revenue stream. This is why credit cards are so profitable. It's not about helping you manage money. It's about creating a system where borrowing becomes normal and repayment becomes prolonged. However, it's important to understand that credit cards themselves are not inherently bad. They can be useful if managed correctly. For example, paying your full balance every month avoids interest completely. In this case, you benefit from convenience without falling into debt. But this requires discipline. The problem is that most people don't use credit cards this way. Instead, they rely on them for everyday expenses, emergencies, and lifestyle upgrades. And that's where the trap becomes effective. Over time, debt becomes normalized. Carrying a balance feels like a normal part of financial life. But this normalization hides the long-term cost. Interest payments quietly reduce your ability to save and invest. Money that could be building wealth is instead being used to pay off past spending. This slows down financial progress. In many ways, credit cards shift your financial future. They allow you to enjoy benefits today, but at the cost of tomorrow. And because the consequences are delayed, the system feels harmless at first, until it's not. So, are credit cards designed to trap you? Not in an obvious or aggressive way, but they are carefully structured to encourage behaviors that lead to debt. From high interest rates and minimum payments to rewards and psychological triggers, every element is designed to keep you spending. The system works best when you don't fully understand it, and that's why awareness is so important, because once you understand how the system works, you can start to use it differently. Instead of being controlled by it, you can control how you use it, and that makes all the difference. If you found this video helpful, make sure to subscribe and share your thoughts in the comments. Thanks for watching, and see you in the next video.